we are the Group 6 and we will present our financial statement analysis. So here are our members. First, Antonio Samantha, Kuming Kizaya Nicole, Munaris Loy J, Plaza Gwyneth Ann, and lastly, Quinto Mary Jane. To start with, let's have a few words about our chosen company, the Universal Robena Corporation or URC. URC is one of the largest product companies in the Philippines. The company has a significant and growing presence in the Asian. It's among of the Philippine pioneers in the industry. It has been operating for over 15 years since Mr. John Gokongwei Jr. established Universal Corn Product in 1954, a cornstarch manufacture plant in Pasig City. So we have horizontal analysis, vertical analysis, trade analysis, and ratio analysis, presenting the financial statement of the URC and the year 2020 to 2021.
Let's begin the analysis with the horizontal analysis or comparative statement provided by URC in the Statement of Financial Position or balance sheet. It can be observed that they experience decline in cash and cash equivalents, though it still has an increase of 2.70% in the total current asset in 2021. URC recognized impairment losses on property, plant, and equipment. The assets written off pertain to a property, equipment of non-operational plants, biological assets, and etc. Furthermore, URC increased its equity by 16.80% and overall URC experienced decline in total assets and total liabilities and equity in 2021 by 13.36%.
Horizontal analysis in income statement. So as you can see, it can be observed that URC increases its sales of goods and services, also known as revenue, and also its cost of sales twice as the revenue. This causes gross profit to decline in 2021 by 3.25%. Their operating income also declined by 8.49%. Declining operating profits indicate that they experienced higher operating costs that they couldn't overcome with more sales or higher prices. Although they experienced decline, their net profit before tax from continuing operation has increased by 16.56%. We can see that there is a discontinued operation in their income statement. You can quickly see that while total sales increased in year 2, the company's growth and net profit percentage decreased.
Analyze URC financial statements. Using vertical analysis or common size analysis in the Statement of Financial Position, in year 1, the cost of sale was only 69% of the company's overall total sales. But in year 2, the percentage increased to 71%. This means the company needs to reduce its cost of goods sold while trying to increase or maintain its total sales amount to increase its gross and net profits in year 3. So in this, you can quickly see that in year 1 and year 2, the gross profit are a lot lower than the cost of sales. So in year 1, cost of sales is only 30% of the revenue, while in the year 2, it declined. The gross profit is only 28% of the revenue. And the overall net income in 2020 is only 10.27% of the total sales and 20.73% in 2021. So we can see the improvement in net income.
For the analysis of URC balance sheet using trend analysis, as we can see in URC current asset, it decreases in 2021, and also the non-current asset. The total assets decreases, as well as the liabilities and equity. This means that in 2021, URC lessened their operations. The decrease in its account in the balance sheet is due to the sale of one of their product line to other business.
Now let us analyze URC financial statements using trend analysis. For the income statement, we have chosen to analyze the trend between sales, cost of goods sold, and gross profit. Using 2019 as a base on amount, it shows that the sales increases gradually from 2020 to 2021, as well as the cost of goods sold. In terms of gross profit, it's decreasing. This indicates that the high cost of goods sold in 2021 causes them to have a lower gross profit in 2021 than the previous year, for they can overcome their high cost of sales.
Some ratio analysis. So in liquidity and efficiency, the company of Universal Ravenna Corporation has the current ratio of 1.73 and the net working capital of 28,306,703,008 and the quick ratio of 1.61 in the year of 2021. So that means that the company of URC can meet its current short-term debt obligation.
The company of URC is generally less risk since the debt-equity ratio is 0.39 in the year 2021, while the debt-equity ratio in the 2020 is 0.80. The URC is more on short-term debts than cash. So on the other hand, the time interest earned ratio of the year 2021 is 15.71. So it means the company has ability to continue to service its debt. The URC company is not able to meet its interest obligations because the earnings are significantly greater than annual interest. So, the URC has earned 15.71 times in the year of 2021 and 14.11 times in the year of 2020, and the rest change.
Market prospects. The URC stock is selling at 10.58 per share and earnings of every share is 10.87, then its price earnings ratio would be 0.96 times. They show that investors are willing to pay 97 times in every 1 peso of the company earning. Was 17% in the year 2021, while in 2020, the dividend yield ratio was 29%.
Net profit margin. URC net profit margin in 2020 is 15% and 29% in 2022. 15% is considered good. This means that in 2020, URC is profitable enough and became more profitable.
Return on equity. URC return on equity in 2020 is 11% and in 2021 is 23%. Both percentage can be considered as low. In 2020, the company return on equity can be considered average, and in 2021, 23% is considered good based on industry standard. This means that the company are a lot better in converting its equity financing into profit in 2022 than the previous year. Dopon formula. URC Dopon ratio is 0.11 or 11% in 2021, which is the average in the industry standards. This means that the company is efficient enough in using its asset to generate profit.